What's up guys, welcome back on the channel. My name's Seb, currency trader. I've been trading the market for the past 10 years. I'm about to show you my market breakdown and a bit more about my strategy, so how it works, how I apply the 50cal strategy. So 50cal strategies that you can find in the link up there. This is my digital course to learn how to trade the way we trade. So I'm here to show you how I apply the strategy and show you through the chart analysis, because unfortunately this week I lost all my charts due to a stupid update. But fortunately for you, I'm going to redo some of these charts for you guys and show you how I see potential setup, what's behind the potential setup, what's behind zone of interest, how I put the whole technical analysis, fundamental analysis together to find an opportunity on the chart. What makes an opportunity long term, short term. So I'll try to be as explanatory as I can be within reason, and yeah, hopefully you get some good insight from this and how the 50cal strategy works. And for those that are already educated on the 50cal strategy, maybe you reinforce the knowledge you have with this, and maybe I will fill some of the gaps that you have on the market. So let's not waste any minute. I will be looking at GJ, gold, S&P, GN. So we'll start with GJ, show you the technical first, how you bring on the fundamental, and how you make the whole thing and you pack it together. Hopefully you get more insight. At the end of this video I'll give you a few tips and tricks, so stay along, and I will explain how the onboarding process works if you want to be part of something more, which is the FXC Academy with my training floor based in Virtual Business Park, and how you can join a successful team on how to learn more about the market so that you become profitable long term and consistently. So enjoy the video and let's dive right onto it. Okay, so we are going to start with GJ. So I'm going to start with GJ and I'm going to do everything related to GJ as I move on. So this is going to be mainly the text, so this is my chart analysis because I'm redoing every chart. I'm just focusing on everything that is technical. Then I will add up pieces together and I will just make you, trying to make you understand how my market's correlated and how I make things working out in my favor. Okay, so right now we're just gonna dive into pure technical analysis, and this should be pretty straightforward process, especially for you guys that are already using the 50cal strategy. Those that aren't using it, just try to piece it together. If you want more information, as I said, the course is still available to purchase online. I'm not a salesman, you don't have to, you can figure it out for yourself, but if you want fast track to understand how we use this profitable strategy, check the link out. So let's get started. So for me, you see, you will realize first thing, I will use a different set of zoom. This is not random. The zoom is to help me out to focus on more recent price action. So the current zoom I'm using, which is the current zoom, for example, you see gold and GJ, is the one I'm really using because this is where my interest lies for the price. I don't really care about the price action prior to this. So everything I see here is what I'm going to be trading, because right now the market is more, let's say, relying on fresh price action. This is from experience and being 10 years on the market. I know for a fact that the more recent price action matter, and for me this is why I'm using the current setup, which means I'm not going to be doing this. I'm looking for an old sort of level there and just try to incorporate into my trading. Right now I've got everything I need in the current chart frame. So this is daily. I do anything daily and never drop down below the daily. Below the daily is not that you can't trade it, it is less, slightly less accurate, but for me it's just, it doesn't give the same longevity onto the trade. I'm not interested in day trading. I have to know that if you trade my strategy 50cal and you trade it on 4 hours time frame and lower, you will be actively day trading, which means you need to be proactive about the trading. That means you need to be on the screen and getting in and out, in and out. I don't want to do that. I don't want to spend my time. So I'm doing daily, weekly, because that allow me to get longer term trade, less time involvement. The management for me is easier. It doesn't mean that it's one way is better than the other. The 4 hours and below requires you to be more hands-on on the chart, and I don't want that anymore. Which is good when you get started. So let's get right onto it. So the main fib is there, and I'm going to show you a quick tips on this fib. This is the main fib we've got for this chart, okay? Maybe you do it already, maybe you don't. What you can witness there, I'll try to use a color that might be better for you guys. 38 work, the 50 kind of work, and then we had this kind of silly flash crash price action that pushed the 61. Anyway, what we can get out of it is that we've used all my level of interest, so which is 38, 50, 61, and we retraced above. What does that mean? What does that mean for you? It means that this fib is now useless to me. Plain and simple. We've used the price action, we've passed it, that's it. I'm not going to start looking for opportunities there using the previous fib that has already been used. For me, the odds of success that were attached to this fib, because my strategy is all statistic based, have already been used and therefore cannot be reused because they will lower the odds of success for the setup I would see using one of these confluences. So the whole strategy I use relies on odds of success that is directly coming from the amount of confluences and the confluences you pick right around a spot price. So to put it simply, my strategy relies on the fact that I'm going to look for various group of traders going for a trade, but I'm going to try to get all of these traders to agree on one specific area spot price. So how does it work? For example, one trader will see here that there is a fib and they'll be interested in the fib. Maybe algorithm will be using this specific fib to enter the market. I don't really care. This is one group of trader. Maybe another group of trader will see this key level and I will use the key level reference. The supply and demand. By the way, key level, supply and demand, smart money concept, all the bullshit is just a key level. So don't get attached to marketing concepts. A key level is a key level. That's it. It's not because you rebrand it in another way that it makes it more interesting or more profitable. A key level is a key level. So in this instance, this will be a key level. From any concept, you can see some people will use the smart money concept, some people will use the supply and demand. The fact is people will see right there a key level, and that is another group of trader. The whole strategy relies on the fact that you make the first group of trader I mentioned, the fib trader, fib algorithm, doesn't matter, and then the key level trader in the same price area, which will be there. And if you do that, you use a bigger chunk of the trading market to find a reason to take the trade. This increases your odds of success, and this is what 50 carat strategy is all about. Finding a zone of interest that has got higher probability to work and using the specific confluences and time frame to just increase the longevity of the trade. And this is why this strategy is profitable, because it's using every other strategy profitable aspect, but put it together in the best possible setup. So, as I said, this fib is now not useful for me. If I was to go down there, I would see that I breach all the level, and as I go along, I kind of use them. But anyway, even if I was to use this fib, because for me it wouldn't be a valid fib I will be using, just depending on the way you see it, but for me the price action around the first move to the downside has been half respected. It could be one, it could be not. this is something very subjective about the fib. There's no wrong way or right way to use it. There's a way that is useful to your strategy or is not useful to your strategy. For me, this fib will not be useful to be extended because it will make me see things that I would want to see but aren't necessarily there for me, for the way I trade. But it's not a wrong fib, so that's the way you have to understand fib. There's no right way or wrong way to use the fib. There is a way that you find useful and you can back it up by the stats, or there's a way that is just random and therefore you're just gambling on the market. So for me, this fib doesn't really help me with my trade. So I'll go to the lower high, same thing, and I will go to the next high, and on this one I'll go to the downside, I'll see the fib respected. This is it. This would have been my main fib. But as I said, you've seen price action has been used. So what can we do with this fib? Nothing. So with this fib, I remove it. Now, I go on to the last one I've got, which is this one. And guess what? We've pretty much used every level from this fib. The only fib level that is remaining is the 61. Now, that doesn't mean that it's a trade. As I said, this is probably one group of trading that will be having an interest there. How sizable this group is, I don't know. And I don't really care. For me, my job is to find many of these groups within the same area, which is the area of interest. So an area of interest can be just of interest until there is enough groups that just gather in the same, which is just an assumption at this point. But until there's enough of this group of traders into one area, that will increase my odds of success, that within my strategy will make me go or not go for the trade setup. So we put it, we've used the 38.50, this fib for now as the 61 as a potential area. Now, the way I had the chart previously, I had a tremendous interest there because as you can see, so by the way, I'm using 100 EMA, 200 EMA, 200 SMA. This is my main dynamic confluences when it comes to moving averages. I don't use any other. I used to use more, but again, I've stepped away from day trading. I went more for the type of swing trading approach, but I'm not a swing trader, so I'm a hybrid trader between day trading and swing trading. I'm trying to get the best of both worlds. A longer term trade, so bigger target, but without the time needed to get there. So I'm trying to be in and out on the market in a way, but without the management of the day trading, which is like more proactive on the chart. So this was the perfect. So this, guys, right there would have been a trade setup. But guess what? Here, one of my confluences just moved away. As it turned out, it moved away from over 30 pips, which makes my zone slightly too big to be kept as a zone of interest. Something else to know about the 50 cal strategy is you have zone of interest that aren't defined by a specific spot price. So within the zone of interest, every price is worth entering when you look for a setup. But what makes the difference is whether you enter on the first set of confluences or the last one. The first set of confluences increase your chances in being the trade, but it also increases your chance of seeing drawdown. The last set of confluences reduces your chances of being in the trade. So increase your chances of missing out on the trade, but drastically reduces the amount of drawdown you'll get. So it's a matter of what you are more comfortable with. I'm more comfortable with drawdown and not missing out. Missing out on the trade frustrates the fuck out of me. And therefore, I prefer to be in a trade rather than missing out just because I didn't want to handle 20, 30 pips drawdown. So in this specific case there, if I was to look at this zone, as it turned out, based on my current trading plan, this set of two confluences for such a big zone is not amazing. Plus, there is a lot more behind the scene than just the technical, but from a technical perspective, this zone is slightly too big and therefore doesn't really have my interest. If we are to look a bit further on this, let's have a look further. Now look at, there's a tiny intra rejection there. So if you look and zoom on it, there's a slight rejection there. And if you check, it's likely been done by the push near the 38 there. So this is what I call an intra-key level. That intra-key level is not major, that's not the major one. And if you wanted to know if it was more than just an intra-key level, that's where you could see if you're actually matching an historical key level, and therefore as such you could be looking down on price action there. And as you can see, there's a bit of reaction here and there, around there. And let's see if there is more before, and yes, there is a key. So that intra-key level now became also an historical key level. Now there's a massive difference between historical key level and intra key level, and it's the way you see it as part of your strategy. For me, there's a big difference, and that difference is what is proprietary to my trading. This is the kind of stuff where the value is, well, for example, coming on the trading floor. This is where I explain where you can make the difference and get the most out of one or the other. So in this, to not complicate the whole thing and not give away the whole trading strategy, obviously, there will be a difference between the way I treat an intra-key level and an historical key level. So let's say for this, it is piquing my interest and therefore has changed the way I'm seeing this zone of interest. This zone of interest that was made of 2 confluences has become now a zone of interest made of 3 confluences. Because it's made my zone different and made up of 3 confluences, maybe the size of it, because there's 3, might matter. And this is where journaling is very important. This is where your journal will tell you whether having 40 pips zone of interest is working for you when you have this type of confluences together. For me, if I'm looking at it, if I'm looking at GG, if I'm looking at the FIB, the key level there, and the EMA, and that EMA is the 101, that zone of interest could be of interest as it is purely on the technical. But then, because this is a particular set of trading as part of my trading plan, I know that this set of trading setup requires me to have a fundamental insight whether this trade is possible or not, and this is what will change. So this is where you get more advanced with the technical. It's just a matter of, oh yeah, I've got a bunch of confluences together, this is a trade. No, this is where you go a little bit further, because this type of setup, you know from experience and your trading plan that they require attention to the fundamental insight. And that fundamental insight first would be simply, let's look at the calendar. So what the calendar is saying for the pound, what's coming. So you have some bullshit Monday that won't really impact our market. Nothing on the Tuesday. We've got nothing pretty much on the Wednesday, apart from what we have here is the PMI. The PMI now could be really important because we've got no driver fundamental for the pound, and therefore this being the only one that is coming and really mattering as it stands in the current climate, because this is reflecting whether our business are doing well or not, this could be impacting our setup. And the consensus is that it's better than the previous one. So better means that it will be positive for the pound. And if it was to be unfolding or to be slightly better, this would mean that we would want to buy the pound. I'm just simplifying the whole thing, but that will be a reason to buy the pound. So now let's say Monday, Tuesday, you're going down and you are arriving in this zone. That zone becomes worthy for me to be taken because it's in line with the fundamental based on that specific set of technical, and therefore this makes this buy possible. So I've just went a bit further ahead of what I'm seeing, but this is one of the way I'll be deciding whether this zone is of interest or not. Another way will be, if my zone is too big, I'll be looking at this, and this is what I could be doing. Not that it would be 2 zones of interest, but my main zone of interest would be from the key level there and the FIB. Okay, so I'm gonna remove these. We know that this one is made up of the FIB and the key level. This is number 3 on my trading plan, so those that follow my trading plan and know what I'm talking about, you know that this is the weakest setup I've got. However, one way I could be using it is that if we were to have this, and we do a strong move to the downside and we would breach these confluences, I know this would back me up and slightly increase the chances of reversing back to my EMA. This is just purely technical, discarding the fundamental. So this is, for example, a way to treat this zone if it was Monday or Tuesday, because you know there's no fundamental driver. So you see that there is various different ways of tackling just a simple technical analysis, and this is the foundation of the strategy. And this is why it's very important when you look at charts and analysis that I do or others do, to understand that they have a plan behind the way they chart, and it's just a matter of copy pasting the chart and just applying the way you think they're going to apply the trade setups. There is a lot more understanding, so one can't just copy paste a chart because he doesn't know how you come to the chart and how you're going to use with all the information. So this is why I'm trying to break down here and just try to be a bit more explanatory on the way I see things. So right now, this is a zone that is this way. I'm gonna get it. The way it is, if we were to see a break Monday, Tuesday, you could see the bottom of it, as we mentioned. So the bottom of it is where we've got our two confluences, and using the top as the confluences itself as a bridge to have the backup, because I'm doing this as well because there's nothing below. There's literally nothing below. It suggests to me that if you are bridging this and this doesn't react, there's nothing there. So having nothing there would mean I'd have to have a strong fundamental driver. But right now, I don't see a strong fundamental driver. So if it was to bridge this one, then there is a chance to get this small trade there to give the 30 pips. Okay, and we're talking about a very poor weak setup. There is obviously a way to find a much stronger one, but this is the first one we get there on our chart because there's not much to be trading in the current GJ. What we haven't paid attention to is the yen in this trade setup, and the yen will have will be really important as well because the yen is a strong fundamental driver, and the yen in the current climate with the war ongoing is seen as a safe haven currency, and then could gain more strength and then put this trade into jeopardy, basically. So this setup will be also risk on, risk off driven, and we'll have to pay attention to this. So this is an example on how to see one setup for my way of charting and using the strategy, guys. Alright guys, so this is what's behind the zone of interest. So you see a lot more than just random tech or even carefully picked tech together. There's a genuine thought process, there's trade management behind it, there's reasoning, and this is why it's hard to just pick somebody's zone of interest and expect the same outcome, because the trading plan, the thought process will be different, and so is the outcome. So we're gonna carry on the analysis. Know that in a few weeks now, you've asked for it for a while. You know that I've run elite charts for over a year, and I've did pretty much this, but not as in depth as I'm doing right now in this example. We've heard you, we've heard what you guys were looking at, and we've got the perfect solution for you coming in the next couple of weeks. I'll do an announcement very soon. I'll do another video explaining what it is, but there will be a new membership coming. I will be doing some more charts for you guys, and I think you like what you are about to get. So let's finish with this and carry on with our analysis. So this is just the first zone of possible interest, but if we were to break down the whole thing the way it was, what I had prior this, you see we had the 50 fib there that was retested for the second time, right there. So as part of this area here, my view was, because we retested the high right there, and we used that kind of 50-50 the first time around and the second time, for me, past this price action right there, past that, I have no interest in trading between this zone and this zone, which means that for the whole price action around the 183.7 and 181.06, I had no interest. Yes, there was a really nice reaction there, but for me, price action has already been used, and therefore I had no interest in any of this. However, the way this, and this is just to link this zone to what I previously said, the way I would have used this zone, for example, we've broken down this zone before, but the way I would have entered prior, regardless of the size of the zone or what it was, I would have entered the first confluences if we had reached this area there. So my area around there was a zone of interest, but not to take a trade, but as part of a confluence for a bridge to give me enough potential for the next zone, which was the start of the EMA. However, right now, we've not seen it. This was a strong reaction, and then we've lost the potential profit-taking breach of confluence to use my first zone, my first confluences as part of my zone. So which means that right now, we go back to what I said, and it'll depend on Monday, Tuesday, if we've got any fundamental driver, and the risk-off, risk-on environment. So just for you guys, this is class as 3. This is probably the lowest possible, it's not probably, it is the lowest setup in my trading plan, and therefore anything that will interfere with the tech will put me off taking the trade. So if the risk environment is against me, I'm not going for this trade. It's not strong enough in my trading plan to go for it. This is the lowest possibility, this is tech driven, and as such, this is an in and out, and I'm not risking a position just for in and out if I've got a strong fundamental driver. It could be yen related, could be risk environment related, it could be disappointing data for the pound. All of this would make me revisit this zone. So you see, this is a zone of interest, this is charted, but what makes the trade is what comes just right before the price action just gets into the zone. So this type of zone for me are more hands-on, and they require a lot more monitoring. This is why 3 usually don't have pendings for me. For example, these are low setup, these require my presence on the chart, and as such I can't leave them to pending. But my 2 and my number 1 type of setup, they don't require any of my presence on the chart. They're strong enough to rely on pending. So I'll say 70-80% of my chart will rely on pendings, and 20-25% say will not rely on pending and will rely on price action. But it's a good thing, because Monday, Tuesday I'm proactive about the trade, so I can monitor this and see how it goes. So let's carry on with the whole opportunity. So another zone of interest was this one. It has now been used. So if we're looking at what is the next confluences here, so we have, so this was my fib, and we've pretty much used every single level. As such, it's gone. So what I'm going to rely on, I'm going to rely on rejection. The next zone of rejection is this one, and then the next one after this is the one there. So here we have these two. Okay. Now, something we haven't talked about, something you can check if you want on the link there, which is the video I made on Tech Fundamental, which is in 3 parts, is alignment. Is there a way to bring, because as you can see, I'm only relying on key level rejection around there. So it's a one confluences. One confluences is very low, and I don't make any proper trading setup based on that. However, I could bring new confluences. One of the confluences could be just a massive uptick in the price and leading to a timing with profit taking. This would be enough of another confluences to get my interest on a zone like this. Or it could be that we are going to line this deck right there with some potential fundamental, and the potential fundamental could be the pound related. So also, if I found any reason to short the pound around this area, this make this zone of interest a trade setup. Not a trade setup as it is, but if we do find other pound pair to be in short, then we have what I call an alignment on the market, and therefore we are likely to see more reason for the pound to be sold, and as such helping this technical setup. But there's two currency in the currency pair, and there's also the yen. So we could be seeing also the yen. So as a matter of fact, we're gonna start with the yen. If you're looking at EJ, for example, EJ, and I'm looking at the possible high again there, and if I'm looking at the weekly, and if I'm looking at the weekly, I don't see much there apart from highlighting a couple of the level we have here. So we have this level right there, but it's a very poor one. You have this. Now what I'm gonna do, I'm just gonna go on the daily and check this level out. Up, I go on the daily. Okay, I see some trading action around these. So these are likely to be the next two potential kind of area. So let's see if they match anything I've got right now. So right now we've got this one, which is very close to this and the recent price action, 30 pips. As such, this is not going to be a trade. However, if you hear me out, on this potential setup right there, which is 30 pips away from the high, we could be having a match from this, because if you look at this, 50 pips away from the current high, there's this one there. So imagine this now. If we are uptrending and we are smashing the previous high, and we tap into this zone, this could provide the alignment we need to reinforce the risk appetite we have in this zone of interest. At the minute it will be still weak, but I'm trying to explain this is how we can also increase the interest on a zone that is too weak for our setup right now. So right now I can plan for this to be ending up this way, and as such bringing the yen confluences. Now if I was to do this yen confluences, and let's say I'm just going to look at the pound New Zealand dollar, and I'm just gonna take a random level. Don't assume this is the match, but say this is the first level there. Not necessarily a trade, unlikely, but imagine now we're tapping into this area there. We have a possible reason for the pound to be sold. Imagine if this zone right there is met, which is likely in terms of pips, is met on this zone, and we have the euro yen. Now what you would have, and this is what we had a few days ago, you would have a pound alignment and a yen alignment in your zone of interest, and even if it's a small one, a very small one, you would have a fundamental driver in your tech favor, which requires, for me, in my opinion, less technical reason for me to enter a trade, and this will be a trade setup. And if I'm looking at the last part to make this setup viable, if I'm looking at this, what else is there after this one? Well, the next zone is quite far away and I don't see much, which is quite good because it means there is not a need to cover a massive area for the drawdown potential. This is a zone where if you reach and you're in alignment, will work or will not work. And as such, I like this type of setup because this is a setup that will work either in a short period of time or a short range of pips and deliver the move or not. But either way, this increase the risk reward you get from this type of setup. I've never been a fan of risk reward. I don't look for a risk reward, but then there's potential setup where the risk reward actually looks really good. And on this one, it looks really good. If I get you back to this potential setup right there, and throw back to earlier this week, this setup based on the previous high had nothing but the zone there, and obviously if you take it from the big one, you've got this fib that you could see, you could not see, and make the zone more or less big. It's not the debate for me. I had none of it apart from the key level here. And having this key level there was too weak to go again on the trade setup. However, if you look back at what happened on this setup here is that we had Euro Yen reaching the level the day before. Hear me out. The day before we reached this, EJ was already on level. So technically for me, there's a potential alignment forming, but it's not a setup because it's only the yen and the GJ wasn't even on the zone yet. However, when I woke up in the morning, Tuesday morning I think it was, this reached my zone there. This did not breach the zone, which meant the fundamental driver for the yen to possibly be strong has gained momentum with GJ in the same level. If this one had breached up, I wouldn't look for an alignment because I will be misaligned and not look for the yen confluences. On top of this, if you look back at what happened on GN there on the high, which was the massive key level here, and if you look at what happened on GA, which was again on the key level and the previous high, we had perfect alignment with the pound pair. So we had on this setup right there the alignment for GBP, yen on a weak key level without any other tech confluences. So for me, it meant that the odds of success were great, even though this was just a key level, and the longevity factor, because you've got a fundamental driver for strong yen and a weak pound, is great, which means that that trade's got a more long-term potential. And as such, this is why this trade delivered over 200 pips, and quite rapidly, quite frankly, and within a very window of drawdown, which actually wasn't even any kind of drawdown on this one. So I'm just trying to point out how you make the difference between getting into a trade and holding the trade or not getting into a trade. Typically, this is a trade that if you require a lot of confluences, you wouldn't go for, but if you look outside of your tech confluences and you look at the way we do trade the 50 cal strategy with the alignment, then you increase the potential, and as such it's helping you to see less need of having something technical. It's not all technical. Matter of fact, when I got onto this, I was lucky to wake up early on this setup because that price had already moved and I was already 20 pips behind the zone, but that 20 pips didn't scare me to be entering after the move was started. Why? Because the potential was to go back all the way down. There is nothing anymore there, and there you've got every fundamental driver to help you out, which means technical are less likely to be working. And this is why everything that you've seen there was very limited in terms of pullback, because the fundamental driver was to the downside. So this is possibly something that could happen again on this weak technical setup. Other than that, having two major rejection here, this zone is very likely to give something on the technical alone. However, it's very hard to tell you how much we can get. So again, this is something we need to align with a bit more potential for the trade. You could be aligning the yen, it could be aligning the pound, it could be bringing other type of confluences, but this is the zone I will go for, because if this zone was to breach, there is one not far away from it which will make me hold again. And again, the strategy is all about getting into the right trade when you know there is a way to be reducing the risk exposure to a point where you could have a high chance of BE when you are wrong. And this is one of the case. Unless we had a strong fundamental driver to breach all of these, which with what I do I would be aware of and then would apply on the market. How? I would wait for this to be breached to go with this one and so on. But I'm likely to get it seen before the price actually reaches this setup. And as far as the pound yen goes, we've got the major reduction there. What I like to be seeing at some point is this EMA to rejoin and add up on the confluences. As far as I'm concerned, there is nothing else for me to see. What will make me revisit my chart is either a breach of this to the upside or a breach of this to the downside. Why? Because what it will do, it will create this, if it goes to the downside, a new fib, this one, that I will start using because we get out of the range, and vice versa. If this was the price movement that break up, then I will have this, and then I will start reusing the key level on top of the fib. But as for now, there is nothing else. And this is the big difference between those that are over keen on the market and always take trade when they shouldn't be, and end up having losses that just take them down in terms of confidence and prevent them from taking good setup because they sometimes just can't afford the drawdown, especially if you're trading with FTMO and prop firm. So for me, I know and I knew from the minute we've made the high again that it would be a limited opportunity market for GJ, and I'm fine with it. I'm not rushing anything because I'm only looking for setups that are high odd of success and with possible long-term longevity. So this is it for GJ, and I'll be doing part 2 where we're gonna look at the metal market.